we've been running a model of Australian short rates for quite some time in order to make sure we capture the influence of inflation. Our model includes data going all the way back to when the Australian cash rate started in 1990, when inflation was much higher than it is now. So we think that makes our model much more sensitive to variations in the problems of inflation that we are seeing once again. Our model explains about 90% of what's in of variation in the Australian cash rate, with a lead of a number of months. And as well as inflation, we include things like unemployment and inflation expectations. And the model explains about 90% of what happens. So we thought we'd update it after yesterday's presentation by Michelle Bullock, in which the RBA left rates unchanged. But when she left rates unchanged, she did change the language that the RBA was using, taking away the possibility of or the emphasis on possible rate hikes. She said in further movements, it's too soon to rule anything in or out. She said that service inflation is difficult to get down, and we know she's talking about rents there. And that service inflation is best measured by the quarterly inflation measure rather than the monthly measure. And when asked in the press conference after the announcement whether the previous rate hike had been a mistake, she said, where we are now is where we need to be. And what do I take away from that is a sense of stability, that the RBA thinks it's in control of inflation, but also what I would call a neutral bias. That is to say, rates aren't going to go anywhere this month or next month or for a number of months after. When we ran our model and updated it based on those variables that I talked about before, our fair value in the model is now 4.15%. So it's still above 4%, and so we think rates are going to be stable for quite a long time. Looking at the future where the RBA thinks inflation might fall, if they are successful, we think there'll be a rate cut at the end of the year, maybe around about Melbourne Cup Day. But it's too early to bet on that. But what we've got now is the RBA is giving us stability in the Australian cash rate this month, next month, and for quite a few months to come.